If you look at the history of Disney, they're a great example of every kind of this risk. This is just one example of carnage and anxiety after another for 25 years. The individual investor, the family, the institutional investor, the sovereign wealth fund, and the corporate treasurer, all of them will change their view and their allocation. It is much less rational to be using equity and equity indexes as a store of value when you have an alternative which is properly engineered.
Hey guys, welcome back to Let's Talk Crypto. Crypto was created as a way for smart investors to get away from the problems they faced with traditional banking and investing. People who aren't fans of crypto often point out that it's highly volatile, its regulations can be risky, and it has no real value. They believe that investing in stocks is a reliable decision, mainly due to its great track record, stricter regulations, and the fact that it puts your money behind the success of a company. In a recent chat with Bitcoin Layer, business executive Michael Saylor dropped some key info that every investor should bear in mind before deciding between stocks and Bitcoin. In his interview, Saylor explains why certain qualities that were perceived as major advantages for the equities market are actually weaknesses. A company can go downhill even when it seems to be doing well, and you never know when that could happen. He even gave 24 different reasons why stock investing is riskier than Bitcoin. More importantly, Saylor discusses why Bitcoin is better than stocks and equity indexes as a long-term store of value. Plus, his firm holds the most BTC among all the publicly traded companies. If you were unsure whether you should go for stocks or Bitcoin, then pay close attention until the end. Let's hear what Michael Saylor has to say, as he shares his valuable experience and knowledge, to get us through the tricky world of traditional finance. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
I think there's two questions there, like how does Bitcoin compare to stocks, and then why do people own equity? Why don't I start with the first question? First of all, Bitcoin is a commodity that is scarce, where the primary use case is money, or that is a long-term store of value. So the reason you want to hold Bitcoin is you want to own a product on an open network for a long period of time, and its use case is to be money. And so the value and use is store of value. Now, when you're holding a stock, you're holding a share of equity in a company. In essence, you're owning a corporation as property. If your goal is to own that as a store of value over a long period of time, then of course that is competitive to Bitcoin financially speaking. But I think it's instructive for an investor that's thinking about whether they want to allocate to Bitcoin or equity to consider the difference. If you are a company, you're an economic creature, and everything in the economy, everything in the world wants to kill you. And you need to have that understanding. Whereas Bitcoin is like a monetary virus or an energy virus. A corporation is a creature. And so if you want to understand the risks that corporations face, it's instructive just to start by reading the 10Ks of publicly traded companies. So I would say a very practical education would be to purchase, to get the 10Ks of 10 or 100 different companies and just start to read all the risk factors, because they really give you a parade of horribles. I've spent many, many years of my life, since 1998, I've been a public company officer. So I've been studying public company prospectuses and general business risk probably since 2 years before we came public. So that goes back a way. If I were to catalog them into a variety of classifications, I would start here. I would say the first risk of any investor in an equity is governance risk. You're risking your money based upon proper corporate governance exercised by the board of directors and by the management team, so the officers and the directors. If the board is bad or goes bad, or if the directors go bad, they can embezzle funds from the company. They can drive the company off a cliff. They can create a civil war within the company. If they can't work out their issues with each other, or if they can't navigate all of the challenges that approach the company in the future, then the entire thing breaks down. So governance risk is a challenge, and governance risk illustrates the general underlying challenge of corporations in general, which is the people are the weak link. Corporations rely upon human beings, and human action is ultimately the source of most of the liabilities in companies. And what you find is the more human action that is required to run the operation, the more risk there is. And many of the greatest corporations and the most successful equities are the ones that manage to execute on a business strategy with the least amount of human behavior. If the business is so simple that it doesn't need people, and there are no decisions to be made, and it runs on autopilot, those are generally good businesses. And the more people involved and the more decisions need to be made, the more risky it is. So, the first risk factor is governance risk.
Saylor suggests that every business faces its own unique challenges and fluctuations throughout its operations cycle. There's no getting away from it. Ultimately, it all comes down to human nature, and that's the real issue. Bitcoin is the perfect example of an asset that runs without human interference. It is secured by mathematical algorithms that have been in place for 14 years without needing a CEO or any other decision maker. Even the biggest naysayers have to admit that Bitcoin is in a league of its own, so it's hard to ignore. Last year, Steve Wozniak praised Bitcoin as a force of nature, saying it was the only asset backed by mathematics like solid gold. When talking to reporters about Bitcoin, Wozniak stated that its mathematical purity surpasses human influence, and he has trust in nature over our species. His views are pretty similar to what Saylor has said about the leading crypto asset. Even though he was a skeptic at some point, MicroStrategy has still invested more than $4 billion in Bitcoin. Let's get back to Saylor's interview, as he puts it all together and summarizes how Bitcoin circumvents the risks of equities to offer an arguably superior investment alternative.
If you look at the history of Disney, and I suggest people study the history of Disney, they're a great example of every kind of this risk. This is just one example of carnage and anxiety after another for 25 years. And this is like the successful company. And this is kind of the life of the equity shareholder, just living in anxiety. And every other company has the same story, and they will continue. I guess I would summarize with this. There's the famous Saint Exupéry quote, right? The design is perfect when there's nothing left to take away. If I take a company and a product, I take away the product, I take away the board of directors, I take away the CEO, I take away the facility, I take away the nexus, I take away the brand, I take away the employees, I take away all the trading, I take away all the motion, I take away the competitors, I take away all the new ideas, I take away all of the uncertainty and the volatility, I take away the human factors and the life cycle, I take away the life and the death and the aging, I take away the drama. What have I got left? I got Bitcoin. Bitcoin is a company where I stripped away 24 different risks. You want to ruin Bitcoin? Every time you want to come up with a new idea, let's change the protocol, let's do this, let's do that, let's make it better, right? You get Ethereum, right? Ethereum is, I got all these new ideas. They have 10 years worth of new ideas on the roadmap. They have new ideas all the time. This idea, that idea. If you want to convert your commodity, which is money, into an equity, which is technology, you keep injecting new ideas. Human beings are born thinking that they're bulletproof and indestructible. And for whatever reason, we're all so arrogant, right? 1.7 million years ago, people figured it out. They created an economy. They invented all this stuff. And the human race keeps inventing and forgetting and inventing and forgetting and inventing, and they rise to a certain level. So every new generation, age 18 or 22 or 25, they think that they're going to do it better. And therefore, they want to, I could run that company better. I could build that product better. If I was in charge of the city, I could run it better. If I was in charge of the economy, if I ran the football league, if I invented the new game, if I invented a new product, if I was in charge of marketing, everybody thinks they could do it better. They have this inventor bias because they invented it. It's their idea. They think it's beautiful and it's a million times better than any other idea. They don't understand all of the ways that it won't be better when it gets introduced. So a corporation, when you're a corporate shareholder, you think by owning a company, you will have something which will outperform Bitcoin. You're going to outperform perfect money. And the only way to outperform perfect money is you have to manage all of the risks I mentioned and outrun the currency debasement rate. You have to manage every single risk and grow more than 7% a year, in your working capital. And that's how you outperform perfect money. And maybe all these things worked better in the past because we never had perfect money. But now you could have Bitcoin as your currency, store of value, medium exchange, and has a half-life of infinity. So what that says theoretically is you should probably be doing a lot less with your working capital, and you should be saving a lot more. That's another way of getting to this idea that in a fiat world where the currency is collapsing, you have to buy and do anything with your money because the currency is going to zero in a hurry, right? And in an economy like that, all of the economic energy goes toward consumption, dissipation, or even production or experimentation in the near term. But in an economy where you have perfect money or properly engineered money, you really start to say, well, the risk of doing all this other stuff is so high, I shouldn't do it. As an individual, you shouldn't have so much allocated to equity, right? You should be shifting your portfolio away from things that have a theoretical return of 7% or 5%. It ought to have a theoretical return of 20%, and there aren't many things that have a theoretical return of 20%. So you should shift away your capital back to strong money because Bitcoin is this risk-free return over the long term. And that causes the individual to be a saver. So the way that you think is going to change. And ultimately, I think that as people understand the risk factors embedded in equity, then the consumer, the individual investor, the family, the institutional investor, the sovereign wealth fund, and the corporate treasurer, all of them will change their view and their allocation because it is much less rational to be using equity and equity indexes as a store of value when you have an alternative which is properly engineered. And I think the world's rational. As people get educated, they will gradually reallocate their portfolios.
According to Saylor, investing in Bitcoin is less risky than stocks, so it might be worth considering if you're looking to diversify your portfolio. Meanwhile, the leading crypto asset hit a 6-month high on Thursday. Following a low of $22,078 on Wednesday, Bitcoin jumped to an intraday high of $25,078 on Thursday, its highest price since August 20, 2022. Ever since the sudden surge, people have been wondering if Bitcoin was beginning its next bull run or if big-time investors were artificially inflating the price in order to sell at a higher value before the next big price drop. What are your thoughts on Michael Saylor's interview and the recent Bitcoin price movements? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.